Welcome to MacroHive Conversations with Bilal Hafiz. MacroHive helps educate investors and provide investment insights for all markets from crypto to equities to bonds. For our latest views, visit macrohive.com. So welcome, greetings to Helen. Fantastic to have you on the podcast show. I've been looking forward to this one.
Thank you. Good to be here. Nice to chat to you again.
Great. And before we go into the heart of our conversation, I do like to ask all my guests something about their origin stories. So it would be great to hear in your own words, what you studied at uni. Was it inevitable you'd end up in politics, finance, economics, and so on?
Okay, so I am afraid I'm another person who did politics, philosophy, and economics at Oxford University, a PPEist. There are many, many of us that have been littered through. I was a contemporary of Rishi Sunak, knew him a bit. He was at a different college to me. But he was not the one you would have expected to end up as prime minister, but that is life, as how it goes. So yeah, look, I was always super interested in politics and economics, but I remember distinctly my mum. So I come from a kind of small business accountancy background. My mum and dad said, get out and earn some money, for goodness sake. And I did an internship in my penultimate year at Oxford in Merrill Lynch, and then started out as a graduate there. So yeah, I was it inevitable where I'd end up? Possibly, in that my business now has been described to me as professional PPE, as in I look at how politics and economics affect financial markets. And actually it wasn't until someone said that to me about a year ago, I thought, oh yeah, that is what I do. So
but you could have also followed the path of a politician. I mean, PPE, Christchurch, Oxford. I mean, that's like you're ticking all the boxes there.
I think Christchurch had something like 11 prime ministers, mostly the 18th century though. I could have done. I thought I wanted to. So 2008-9, I dipped into the world of politics. Coming out of banking and fund management, and I found that politics as a job is not for me because I'm a real tangible results person. I mean, Bilal, from like being a markets person, you get, you can see it. You invest in something, you make a recommendation, the numbers are there. You cannot avoid it. It's a discipline for you. Politics is a world of influence and it's very intangible. And I found that quite frustrating for me personally, much as I'm fascinated by politics. As a job, it takes a particular kind of character, I think.
That's very politely put. So you went to Merrill's, and what role did you have at Merrill's? Like your finance career, like in the city, what area of finance was it?
So actually, so I started literally. We were in New York for graduate training, the global program, in 2001, the summer. We had our leaving drinks on the 9th of September 2001. And then we all came back to London. And of course, September 11th happened and it was all extremely chaotic. So at that point, we were supposed to rotate as graduates, but, it was just the whole thing was changed. And I ended up in foreign exchange, which I didn't particularly know that much about, but turned out to be very much suited to the politics and economics background I had. I must say again, remember the timing, 2001, everyone thought currencies were dead because the euro had just swallowed up 12 of them, however many there were. But obviously it turned out people still very much needed to trade in currencies. So that's where I started out as an analyst of the graduate program. And I carried on in foreign exchange until that diversion 2008-9 into politics, and then came back into finance, again, foreign exchange. Yeah, it's pretty much always been currencies and some fixed income that I've done.
And the foray into politics, that was when you worked with George Osborne, was it?
That's right, exactly. Now, that's the funny thing, right? So that was 2008, basically. When Lehman Brothers went under, I was in George Osborne's office. I remember him coming in and I'd had a newspaper. This is how old-fashioned I am, right? I had a newspaper I was reading physically. And the front page was obviously chaos and bankers with cardboard boxes and Lehman's crashed. And I remember George looked at me and he went, "Oh, bet you're glad you're not there anymore." And I thought, part of me thought, yes, because this is super exciting to be on the politics side. Part of me was like, oh no, because like the market is where it's all happening now. This is the nexus of what's going to impact our world, is what's going to happen in the markets as a result of the fallout. So it's a very kind of weird mixed emotion to be there then. But part of the reason they actually, I mean, again, this is maybe a bit crazy as a 27-year-old, but they needed people with some understanding of banking and markets. And ironically, despite only 7 years in the industry, I obviously knew a bit more about it than them because they were politicians. And there'd been probably 2 decades where politics and banking had just coexisted, but totally separately and not interacted with one another. And suddenly politicians are being asked to regulate banks and figure out what to do with them. So even me, with my relatively little experience, knew a bit more than they did.
That's great. And then eventually you ended up launching your own business. I mean, what motivated that? I mean, because you could have stayed in the city, in various different forms, or there's lots of different roles one can have. What made you take the plunge into launching your own business?
So a couple of things. One, in terms of what was going on in the world, actually at that point, it was just after 2016, it was after Brexit. And I'd actually started Blonde Money as just a blog in my spare time a couple of years before, pretty much as a way of disciplining myself on my macro themes of, when you have it written down, you can revisit what you got right, what you got wrong. I quite liked that as a way of shaping my thoughts. Probably something, Bilal, you may have come across yourself in what you did. And, then people were starting to interact with it and ask questions, and it started making me think, well, maybe something more could come from this. But what really gave me the prod, I said 2 things. One was Brexit, because I remember that global investment team call I had, the week before. And, 50 minutes into a 1-hour global conference call, nobody has said, what are we going to do if Leave win this vote? And I remember just piping up saying, well, there are 2 choices on the ballot paper. It's 50-50 from a basic position. I mean, maybe you think it's 90% one way, but, there is another choice. I remember a guy in Switzerland saying, oh, we'll have much bigger problems if Leave win. Oh, we don't need to talk about it now. I thought, oh, okay. I think markets have a bit of a blind spot sometimes for politics. And it was in sort of the 2 years after that, 18 months after that, really, I launched my business. And the other factor, I should be consistent. My brother started his own business as an accountant a few years before. So I kind of could see how that side was done. Because sometimes when you start your own business, as you know, you don't necessarily know how to do it or what you're doing. And it's helpful to have others to help you out with that.
No, that's great. And we'll come back to what Blonde Money does later on the call. Now, coming into sort of markets and so on, you alluded to the fact that, politics, became more important after Brexit. And I guess if we kind of think back to before Brexit, we were in an environment where it was all about interest rates. Everyone in the market just focuses on the Fed, the Bank of England, low rates, and that's all you need to worry about. And the Fed, or Bank of England or whoever will come in to bail out markets if necessary. But it seems like since Brexit, and Trump especially, now Trump 2.0, we're kind of in this world of like politics, shifting geopolitics, and like investors seem quite uncomfortable in this environment. All these uncertainty measures are like screaming higher. And I know you've done some work in this area, which is interesting. But how do you see this environment that we're in right now? I mean, is this like a temporary phase of uncertainty, and then we're going to go back to monetary policy cycles and so on? How do you see this?
No, I think we're in a completely new world. It's been knocking on the door for a while, but probably that last decade. And now we really are in this new world. In some respects, I say it's a new world, bit more of an old world, a bit more the 1970s and 80s, where politics and economics really matter. And I think the factor that's shifted that has been interest rates, normalization of interest rates, the move away from the unconventional easing world. So that's one part of it. And then, the other part being that this politics and economics are, frankly, they were always extremely important. It's just that when inflation was very steady and stable, and when interest rates were low and volatility was low and liquidity was plentiful, financial markets didn't have to care too much about it. But I would say that the last, 16-year period, 10-year period has been the anomaly. Now I say it's a new world, it's a more normal world. Going back to this world where these things happen. And you picked up very graciously on this thing I've been looking at about uncertainty, because that's what we keep hearing all the time. It's so uncertain. It's not that uncertain, really. It might feel uncomfortable. It might be a new framework. As you say, people have been very focused on inflation numbers and what that means for interest rates. But it's not really uncertain what politicians are doing. I mean, Trump has been remarkably consistent on this, particularly on tariffs. He's talked about them for 40 odd years. So I don't think it is uncertain. It might feel uncomfortable. And of course, everything in any market, there's always balance of probabilities, new information, the known unknowns that you have to look through. But that's part of what we do in markets. That's what the price is all about. I think it's just, instead of looking at this piece of data that might impact inflation, now it's far more about, well, what happens geopolitically that's going to move the dial on policy. So it's just a change in emphasis, but I appreciate it's one that, it's funny for me, it's something I've always followed, like my whole life. Sorry, bit of a weirdo. I know, what a strange child I was to be interested in politics and economics, but it may feel uncomfortable in a world where people have been very focused on, very quantitative measures, I would say.
And, you're absolutely right about Trump being very transparent about tariffs. And in general, he's remarkably transparent. Like, what you see is what you get. And in some ways, he's like the anti-politician, where politicians say one thing and behind the scenes they do something else. With Trump, there's no filter, which is sometimes what people find challenging. But I suppose another element of this uncertainty, you could say, or this discomfort with, say, someone like Trump in particular, is that the way he negotiates is kind of very difficult for the market to take in some ways, because he tends to put out like an extreme position. So you think, okay, is that what he wants to do? And then he retracts, and then he pushes it forward and stuff. So he's almost doing he's doing the deal making live.
Yeah, absolutely. Live tweeting it as well, right?
Yeah, he's live tweeting it. And so as investors, you look at the tweets, you think, okay, should I sort of fade that? Should I go with it? Is he going to retract or not? So it's almost like all the backroom dealing is happening live in front of markets. So as an investor, or how do you like respond to that kind of thing I've just told you?
I think that is to do with assessing where you think this is all going to end up, which requires an understanding of political aims, political power, political constraints, just in the way that you would look and say years ago, oh, inflation spiked a bit higher. Does the central bank look through it? What's the argument they're making? Who's the hawk? Who's the dove? Where's the pressure? We're all used to those things. We're just used to them with a different style of person. I totally get your point that Trump is a different character. Not an unknown quantity. I remember Trump 1, where we all had to spend our time looking at Twitter. In fact, that's when Bloomberg started to put in tweets, didn't it, to its like news feed, because it was so relevant. I also think, it's not just about Trump, and there is an uncertainty. That is actually the more uncertain element, to be fair to anyone assessing where things are going to end up. How are other countries, how are other leaders going to respond? And how are they going to interact with other countries? So purely on the tariffs, you've got questions then of, so how does the EU want to play this? Well, who is the EU? There are many different parts to it. Then how is the EU going to interact with China? That's just a 3-player game, and those are 3 big economies. We've actually got far more than that, including the emerging economies too. But that is, again, as I say to you, it would be a question of looking at like the mandate of the politician, the strength of their power, their ability to move, or their constraints in terms of their fiscal position rather than, monetary policy. But that is all, I mean, the thing is, remember back to sovereign debt crisis. It wasn't that long ago, really. Well, maybe it is. Maybe that is a long time ago. It doesn't seem it to me or you, probably. But you remember Alexis Tsipras, this firebrand populist who came up with a completely new party in Greece, Syriza. I'm going to stick up for Greece, and I'm going to, I'm going to just tear everything up and have a revolution and we won't cooperate. I'll have a referendum. And then actually, he ended up doing the U-turn, didn't he? And effectively, Greece effectively got bailed out. That's not that long ago. So I kind of think that markets have, as you say, they've had experience with politicians who don't do what they say. They've had experience with Trump, who does do what he says. But to be quite honest, I think something else might be going on. It's a bit of a developing theme. It's only a theory for now. There's a bit of a lack of resilience because of the huge scale of the shock that we all went through with COVID. I mean, in terms of personally, as much as anything. That level of uncertainty, huge global shock like that, the whole world economy shutting down and reopening is truly unprecedented. And then subsequently there were further shocks like the Ukraine war, the return of inflation, the massive rise in interest rates, and I think people had just had enough and can't kind of cope and process it all. And that I do understand. And I can. It was that level of volatility shock in terms of to our lifestyles as much as to our investments that what happened. I mean, we got through it. Everyone, hopefully, I hope, got through it. But it kind of, like anything, after any kind of shock, like animals when they're shocked, they just want to kind of hide away, everything be calm, just let's just chill out and take this slowly. And then suddenly you get Trump again, and it's just a bit too much.
Yeah, we just don't have those sort of the resilience to deal with that. So, in terms of macro themes, one of the themes people are playing around with is a weak dollar in this environment. So the argument is, we're in this world where there's tariffs, international investors are going to pull out the US in various different forms. The US themselves, Trump may want a weak dollar to help bring down the US current account deficit. So let's use that as the focal point, of how to bring in all this politics and so on. So how would you see this idea of a weaker dollar in the context of this new geopolitical setup that we have?
Well, I think we're in an economic war now. I think that is what the tariffs were the beginning of, but they're only the beginning of it. So it's effectively US versus China. Some other countries may have to pick a side, but it's basically US China, and therefore the US or Trump and Besant clearly want to use anything at their disposal. Now we've started with tariffs, but I think the currency itself could kind of become a weapon. We kind of had currency wars before, we've had trade wars before, but as I say, it's almost an economic war. So I think I'm not quite sure how this is going to pan out initially. I think the weaker dollar is part of the strategy, as you kind of suggested there. So,
but I guess what you're saying is that actually the crux of this is an economic war, and the US and China are the two sort of players in this game. Yeah. And so things will fall out from that. Recently, Besant seemed to say we don't want to decouple from China. I mean, was that just kind of a way to placate markets, before the next move in this war?
I think some of that is going on, definitely. I mean, the key thing about what happened in April as a response to Liberation Day is we came extremely close to a real proper systemic meltdown. And I don't make light of overstating that, because we all have a responsibility in our jobs as researchers to be sensible about things and rational. But, and this is something we can go into, but it's something I look at a lot, which is to do with the gamma in the S&P 500, to do with options on the S&P 500. And there was a huge gap, effectively, underneath the stock market, because people hadn't been buying insurance because things have been going so well for so long. Why should they? And as with most things, when there isn't any insurance and it drops and it goes, it could take out everybody. And we were starting to get that contagion meltdown where, because, so volatility goes to such extremes and people have to reduce positions elsewhere, you get the dominoes and you get a real potential systemic crisis. So I think of course, I believe, and you would have to think Scott Bessent, having been a macro investor, gets that, and that was at least part of the momentum towards Trump having to say something to stem that. But I don't think but that's where sort of seeing off a systemic crisis is different to, I guess they're calling it a controlled demolition of the global financial system, which effectively seems to be what Scott Bessent wants to do. So back to the point about Bessent and the way he communicates, when he talks about not fully, decoupling from China, it's trying to reframe it, trying to head off any kind of utter chaos, panic, systemic meltdown. But it does not mean, oh, well, we were just joking about the whole thing and we don't mean any of it,
Okay, so the idea, so your thing there would be that investors shouldn't be lulled into this false sense that we're going to go back to the old paradigm.
No. And if anything, on what I'm looking at when I monitor these gamma exposures in option positions in the S&P 500, and there's a guy called Squeeze Metrics, great name. You can go to his website and you can see it yourself. But it's, if anything, it's actually sort of the same problem writ even larger, because, as I say, people they were not buying insurance on stock markets going down, because for the last 3 years, this Sharpe ratio on the S&P 500 was 4 or something. Oh, no, sorry, it was 2. Apologies. It's 2. That is huge. The general Sharpe ratio of the S&P 500 is around about 0.4 over 50, 60 years. But volatility had collapsed to such a degree as, the return was going up, that was a wildly high risk adjusted return. So I do understand the motivation that then people, buying insurance was just a drag on performance. So why would you? My concern now is the rally back, and more importantly, the collapse in volatility and the VIX coming down so much shows you people are still not buying insurance, and the direction of travel is very much still the same thing. They do want to. Scott Bessent, he wrote a brilliant article. Well, sorry, depending on your political view, he wrote a very clear article. I shouldn't say. I think it's brilliant for being clear. I'm not saying I agree with it or disagree with it, because it doesn't matter what I think. But it was in The Economist in October, an op-ed piece he wrote about reframing the economic system. And it's clearly what he believes in. It clearly chimes with what Trump believes in, and they really want to do it. So they're going to try their best to do it. And
so, I mean, you seem to be hinting that equities may be too optimistic about what's about to come through with this, this economic war. So how do you see this from a medium-term perspective then, in terms of which markets are not pricing this kind of economic war that we're seeing, this controlled demolition, as you say?
Controlled demolition, yeah. So, well, certainly the S&P 500 is getting extremely toppy. It could last probably, I mean, we may run another 4 or 5 weeks. It's probably a sort of second half of the year story that starts to turn around. I think it will at least fall back 15% or so, in terms of the way, you can't do any. The thing about a controlled demolition is, right, it either doesn't work. It either doesn't work because it doesn't do very much, but it's sort of the building crumbles a bit, or it gets totally out of hand and it just falls apart. So they're both negative. Even if it does work, it's a controlled demolition. So this idea of rebalancing from Wall Street to Main Street is what the administration wants. So I don't see much of a scenario where we don't have a short term, or at least, let's say, for the next 12 months, a lower level on the S&P 500. You talked about pricing globally, because, of course, we're going to have an economic softening from all of this as well. Partly uncertainty, partly reshoring of supply chains, partly inflation and consumers retrenching, and partly probably higher interest rates. Again, that's not going to help too many companies or households. So I think, the next 12 months are difficult economically. I'm trying to think of a place that would be isolated from it, and I'm struggling to find one.
I mean, some people point to a place like India or something, which in general has a bit more of a closed economy. There might be, a shift away from China towards India. And India people love anyway because of its demographics and,
Exactly.
and all of those sorts of things.
I think that's fair. I think on a relative basis, as you say, there's a lot of strength there. The political game that Modi seems to be playing with Trump seems to be going quite well for India, and that is part of the way you want to look at the world is where. So I say it's this economic war, US-China. So like any war, ultimately, who do you think's going to win and why, and what's going to happen to them in the process? So people have to make their own mind up about that. It's a bit like the Cold War. There are points in the 1980s where people would have really felt like, oh my goodness, Russia's got so many nuclear weapons. This is never going to end. This is a nightmare. To the point where it was like, oh no, wait, they're going to open a McDonald's in Russia. It's an ebb and flow. But yeah, India and maybe some of the smaller economies as well, like a kind of Sweden or something. But then they're harder for people to get a lot of exposure to. So difficult. I know, depending.
One narrative I've seen in the market, which people seem to have jumped onto, is the European story, which is that Europe does well in crises, and Trump has just introduced a shock to Europe, and so Europe now is being forced to kind of get its act together and sort of step up, both in terms of defense, military, obviously, but then also more generally, do they have like a national economic sort of policy, and how do they step up to the global stage? So how do you view Europe in all of this?
Well, I've been a bit surprised at the universal optimism about Europe because of political fiscal dimension. Now, it is good that Germany is willing to take part in the rebalancing, by which I mean issue more debt and stop becoming obsessed with surpluses and balanced budgets. That in a world that is going to be shocked into rebalancing, you might as well get on with it. So that's a positive. But the negative is across Europe more broadly, is the political problem, the fragmentation of electorates. So taking Germany for a minute, and we'll go to France in a sec, but Germany, it's going to be really hard for Friedrich Merz, the Chancellor, to keep going and to be able to do what he wants to do because of how he has been elected. I mean, there was a terrible result for his party in the election. The two main parties, SPD and the CDU in Germany, between them got less than 50% of the vote. That has been falling for 20 years, but that's, to be underneath 50%, I think it's about 44% of the vote they got, is pretty poor, in line with many, many other countries where legacy traditional parties people are turning away from them. They do not think that they're working for them. But it means he's now going into coalition with, a discredited party that were also in the prior government and were thought to have done very badly. Whilst, of course, the AFD did very well and are rising in the opinion polls. They're now topping opinion polls in Germany. And Merz is struggling to keep his own party together. So can you imagine an election where 9 days after the result, on pretty poor result for even you come first, but you've not done that well, you then say, I want to rip up everything I've ever said about balanced budgets that I said in the campaign. I said in the campaign, we will not reform the debt brake because, future generations should not be burdened with tax for paying for our profligacy. You rip it up completely and say, oh yeah, well, we're going to issue loads more debt. We're going to do it basically unlimited in terms of defense. And we're going to do it in coordination with a left the left of centre party, and we'll let them do infrastructure spending. And, oh, by the way, when we get down to the coalition agreement, we'll also let the Greens have a bit of a say in that as well. And here's the key point. I'm going to pass it through the last parliament. So you just had an election where you were so fed up, you actually voted out one party. So the FDP, who were the third member of the last government, did so badly, they didn't even meet the 5% threshold that's the minimum to get into the German parliament. And yet, the parliamentary debate where Merz stood up and explained what he was going to do on debt, Christian Lindner, who was head of that party, stood up and he actually said, will the real Friedrich Merz please stand up? What have you done with him? How has he come into this debate? But why was Lindner even speaking? They'd just been voted out. It's a bit like in Canada, if they got Pierre Poilievre to come and give a debate in Parliament, but he's just been voted out as the opposition leader. I mean, I'm saying, I know I'm going on about this, but it's important to show you the radical shift from Germany, but also that kind of behaviour may well come back to bury you later as a politician, because you can only ride roughshod over an electorate if you deliver something amazing for them. Otherwise, they'll be absolutely furious. So I wasn't too surprised that Friedrich Merz, for the first time in post-war history, failed to be elected as Chancellor when he went to his first vote in the Bundestag. He got it in the second vote, because I think members of his own party thought, what the hell are you doing? That means it's really hard. And that's just Germany, which is an important part of the EU. It's really hard for the EU to deliver on its platform with that kind of weakness of the government.
And, what you allude to there is, the rise of all of these populist parties that is sort of disrupting the conventional two-party system. There's talk in Germany of banning AfD in some way. In the UK, obviously, we just had the local council elections. The reforms sort of risen sharply, and support for the Tories has collapsed. So it almost looks like the Reform is the main opposition party now.
Yeah.
I mean, if you draw all of those sorts of things together, we had Portugal as well, of course. We've had Netherlands. What does it all mean?
What does it all mean? And by the way, I should mention France as well, where
France, of course,
they have an even bigger debt to GDP ratio than the UK. But apparently everyone seems to be quite calm about their debt position, despite the fact they have an unelected prime minister who only just managed to get a budget through and could be brought down at any time. But anyway, and they can't even have another set of elections until June. So they could have another set of elections. What does it all mean? It means that Trump is in a really strong position globally because he has a mandate and he has a majority. Ironically, in the UK, the government has a massive majority, but it doesn't really have a mandate for what it's doing. And at the time of us talking right now, the Labour government have said they're kind of going to ease back and try and U-turn on this winter fuel policy, which was one of the first decisions they made coming in last year. So can you believe that? Like, massive majority, and a year later, they're so panic-stricken that they want to ditch one of their earliest decisions that they've made. It all means that it means countries with a big debt to GDP ratio will really struggle to make that sustainable. So it's a political risk premium on countries. So France and the UK, and we've had a sniff of it in the UK, are at risk. I believe France is getting a bit of I'm told people think the EU, because the EU brings all the debts together, it's going to be fine. Interesting, because in 2011, 12, 13, it was the opposite was an issue. So I don't think that will last, by the way. So I think you see a rational repricing of debt in those countries, which means higher interest rates, which all else equal tends towards definitely tighter conditions, probably lower growth. I mean, Germany has still got a growth problem, and this isn't going to change it that quickly. And then, so basically what you're looking for, and what it means in that economic war I was talking about, is the reason Trump can be so aggressive is he's at that stronger political position. May not always be that way. And obviously with the midterm elections, when they start to come closer, that's going to be a problem. But, it may be a problem unless he's extremely popular and doing very well. So So I guess at the margin, I would say political risk premium, higher yields, lower growth, and once again, it actually means the US is in a slightly stronger position, although I know an awful lot of the commentary is that it's not. But politically, actually, it is.
Does that also apply to the US's position against China?
So people talk about, obviously, you've got two different regimes, where one is US democratic, China's like communist capitalism. But the interesting thing about China is that doesn't mean you can do whatever you want. I remember, I think it was, I must have been in the wake of the European sovereign debt crisis. I was working at a French bank, and their Chinese economist pointed out to me, China doesn't always want a huge stimulus, because if you have a huge stimulus and you make some wealthy people very wealthy, you broaden inequality and you stoke civil unrest. Equally, you don't want a complete nightmarish downturn for everybody, because again, you may stoke social unrest. So what China want is some growth, some inflation, not too much, and definitely no volatility. So I think that actually, politically speaking, Trump is in a better position as a newly elected leader with a majority in Congress and conservative judges on the judiciary, albeit strong polarization in America. So you'll see net approval collapsing because people get annoyed and fed up with him. But he's in a strong position now anyway. Whereas China has a lot of its own domestic economic issues that have been going on for some time. Real estate bubble is kind of deflating, all the horrible bad debts in local governments. And then it has this issue with trying to suppress volatility. If you've got somebody trying to completely rebalance the global system on the other side, you can see why that would cause them a headache.
Yeah, it's a really interesting point. I mean, the message seems to be the US is actually in a good position in this whole rebalancing. So how does one position for that then? Because at the beginning you were saying the S&P may be overdone, so maybe that's not the right place to be. But at the same time, the US is in a strong position politically. Yeah. So how could one benefit from that as an investor?
So where I would look in the US is depends how people run their portfolios, but you do want to be a stock picker here. So you really want to pick up on a company that is able to cope with these shifts in supply chains, able to cope with higher interest rates. And there are some of those, out there. Even some of the Mag 7 where, some of the froth will come off them, but they're probably going to be okay. People like Apple, for example. But the other part to that is, if you're like a fixed income investor, then it's probably about just making sure you're sort of you haven't got too long duration, because you do still have huge debt issuance in the US, as we know, and you will have some inflation, and that is going to weigh on the long end, as is happening as we talk. I think, despite we've discussed a weaker dollar, it's not time to exit the dollar completely in this scenario at all, because it still remains, as I've said, there's still a kind of strong political position. But what you want to look out for is, in the controlled demolition, is there a point where it gets out of control politically? And for that, I'd be looking at senators in the Senate and Republican senators, and whether they are starting to, say enough is enough and I can't back this anymore. That's one thing. And then with the midterm elections, it'll be, I think by November this year, Trump, that's why he's going hell for leather now. He has to get so much done so quickly, because every US election is about momentum. Well, every election is, but particularly in the US, right? As soon as an election ends, the next one begins. So the Democrats are in a complete disaster right now, because they haven't even got together on who is going to go up against him in 4 years' time. The Republicans in 4 years' time. So that is a problem in the US. So he kind of has to get all the bad news out of the way now. as I say, he's sort of he's like, imagine it like a grains of sand in a timer, and it's turned over and the grains are starting to drop out. That's Trump now at the beginning with all the sand up at his end, and it's starting to seep away. And he's hoping he can get so much done, like shock and awe, that he'll flip the whole thing back round again, because he'll get a boost to economic growth in a year's time, and everyone will think he's a genius.
I mean, it could work. I mean, to some extent, as you say, I mean, he's doing all the sort of the bad stuff first, the so-called bad stuff first, and give good stuff.
Well, a revolution. I mean, he's getting the tax cuts are next, right? I mean, he's banking on the working man saying, things are a bit funny and I'm a bit worried about my job, but hey, I've got more money in my pocket. Let's give him a go. See what happens. See where this plays out.
I mean, one reason in recent years the US has done so well is being these, the AI story, the big tech and so on. And so how do you think about whether the Mag 7, how the AI story, the tech story, the US dominance in that space, how does that, perform in this new paradigm?
I feel a bit like this as I did, I think again about returning to the 80s as a bit of a way to look at this in terms of there was great debate about whether Russia had the same technology in its weaponry as the US. And it reminds me of that. It's kind of like an arms race in chips, where there's, Chinese versions of US AI and tech, which appears to be cheaper. But is it better? Do we know the truth? Is it really cheaper? What's really going on? And so I see it. I think again, it comes down to this point of it's an arms race. So who do you think is going to win in the end? I believe in the longer term that the US has got the intellectual property edge over China. We'll see. And people may disagree with me, and I get it, and they can provide to me like look at BYD, look at Huawei, look at what's going. But the problem is really knowing what's going on. That's why I say it's a bit like Russia in the 80s. What do we really know? Where is it really coming from? Is it really sustainable? Are they burning up, coal-fired power stations to get the energy needed to do this stuff? Is that sustainable for 30 years? Maybe it will be for 3 years. So, we are in the midst of a technological revolution. So whilst I am a bit negative on, the S&P 500, I do think you do want to have some tech somewhere in your portfolio because, I don't know about you, but I use ChatGPT several times a day now. And I find it hard to...
I think I use it more than Google now. Google search.
Yeah.
It's like the default search I use now, ChatGPT or some of these other LLMs. So
I know. There you go. Anyway.
Yeah. And I just wanted to round off with the defense. Obviously every country in the world seems to be increasing the defense spending. What does that all mean?
Yeah, I think that is a far more interesting macro focus really than tech now, because the opportunities in defense are huge. What I'm finding quite interesting, again, when you look at the politics, is a lot of governments are talking about, particularly this has happened in the UK, it's happening in EU discussions. They're talking about allowing procurement to go to smaller or startup type companies. I think the idea being that some of the technological warfare developments with things like drones is coming up from maybe smaller companies that were missing out on government contracts because they were maybe too small, or they didn't think they could have the scale, or just weren't known to governments. And I think that's fascinating. I'm sure you're going to find some real great investments there. I was reading about Ireland, which has been kind of a neutral country on defense, but obviously people spot that there is money going into this sector. So I was reading about a company which looks at radar, sonar for undersea cables for technology, which could now be redeployed to check for mines or submarines or whatever. And so I think that's super interesting. There's like this whole defense tech world. And I'm pretty bullish on the UK in that zone, because when you look at the world's defense companies, the only European one in the top 10, well, basically it's BAE Systems, and then there's Thales in France, but BAE Systems is huge. And I think and you see talk about like a rearmament bank for Europe. There's talk of like countries pooling together to try and get hold of this tech. I mean, the UK could do very, very well on that front. It's got the technological developments, it's got the research in the universities, and it's got actual good defense companies that are here. Actually, one of the things I encourage people to read the April 2nd Liberation Day White House statement, because it says, these reciprocal tariffs at the start is like reciprocal tariffs for economic and national security, right? This is all the same story, trade and defense. And later on, it says that the US does not have enough stockpiles of weapons. And it says we want to invest in manufacturing. They want to bring manufacturing onshore so they can manufacture weaponry. It says that. It says specifically things like batteries and other technologies to do with defense. And so maybe it's mad, maybe it isn't, but it's a different world when you're talking about a country that wants to effectively rearm itself. I mean, and you know why, by the way, Bilal, you and I are similar age, and I was thinking about this. Probably it's our age and younger have lived through a pretty long period of peace. Well, in our part of the world, frankly. I mean, I was 11 when the Berlin Wall came down. I thought, what the hell did they build a wall through a city? This is insane. Before I then went to find out about it. I think we may be a generation that doesn't get it. But if you're Donald Trump, who's basically like my parents' age, he remembers far more of the horrors of war, and sort of the need to prepare for war can get you to peace would be, I think, his argument. But perhaps that is why there has been less coverage of the defense angle to this, even though it goes hand in hand for the administration in the US.
No, that's great. That's been fantastic. I did want to just round off with a couple of personal questions that I like to ask my guests. Nothing too personal.
No, it's fine.
One is, I mean, given you being in the industry, in lots of different facets of the industry for a while now, what's the best advice on investing that you've ever received?
I think I come back to this again and again. It's Gordon Gekko in Wall Street. When he turns to Bud Fox, he's like, don't get emotional about stocks. And I think there is something in that. We think we are very serious quantitative people all the time, and lots of us probably run lots of models, but people do get emotional. We all have emotions, and it's recognizing those. And that it's something with my business where we look at how it's not just political risk, but we look a lot at how political risk affects markets. Everyone has a political bias. Everyone has an emotion about it. Like, oh, I don't want this. I don't want war. I don't want the UK to leave the EU. I don't want these. And it's emotional. Of course it is. And it's important for all of us to try and keep those emotional biases away from our rational decisions.
And that's great advice, actually, very appropriate for our times. The other one was, what advice would you give to the youngsters in our audience who are at uni? They could be graduating this year, entering the wide world, the real world. What advice would you give them?
Never give up.
Okay.
It's all, everyone, I'm sure everyone remembers those points in their 20s where it just doesn't seem to be working. Whatever job you're in, you're not getting where you want to go. Your manager doesn't get what you're about. You don't like something. You didn't get the pay rise. You couldn't get, you didn't get hired at the interview. There's always something. And it's really important not to get disheartened and discouraged. And particularly, I do think, young people, social media, the world we live in, I was talking about getting emotional about what we read about. I think they can feel pretty discouraged sometimes about the world. And it's important to get that resilience that we started off talking about. We all need it. We all need the resilience in these times. And so, yeah, don't give up. You'll get there in the end.
That's great advice. The other one was, do you have some kind of daily routine or some productivity hacks that you have? Obviously, you're very productive. You're sort of very widely followed and so on.
Yeah. Well, I mean, I write this actually. So my partner in life is my business partner, which helps in many ways. Although we have to have a strict no talk about markets from like end of the day Friday until Sunday. But we've always written every morning we write what we call the day-to-day, 5 to 10 bullet points of what happened overnight. We do it for ourselves as much as we do it for our clients. I don't know if you did this when you started out in the market, but it's something I always did coming in, like what were the news stories overnight? And actually it sounds easy, but it's so hard, and it's taking us longer and longer because there's a lot of noise out there, a lot of emotion, a lot of opinion, not a lot of facts. And facts are in short supply. So yeah, spending that first hour of the day getting the facts straight of what has actually happened in the world is the way to set yourself up for the day ahead, because you'll always get pulled in about a million different directions. So good to get the facts straight.
I like first. That. Yeah. And I'm a big reader, love books. What are some of the books that have influenced you, or perhaps even recent books that you've liked?
I've always, this isn't just because it's finance, but I've always liked Liar's Poker. It's such a well-written book. Michael Lewis is a genius at distilling complex financial topics down. And it's so readable and so interesting. And he's obviously done so many books in that area. So I've always liked that. Although he says, I remember him saying, I didn't write it as a way to attract people to the industry. I was trying to warn them of the, way it makes you insane. Like there's a bit of it where he says something about, I told my girlfriend at the time I was waking up and dreaming of folding the toilet roll into a V when, it hangs down so that it's perfect. Because I got, went to so many hotels where it was 5-star luxury, and that's the kind of insane level you get to with things. So yeah, reading that. And then, I'm just going to sound really sad. I just got a book about, what's the title of it? It's, the guy that David Swenson ran Yale's endowment, about managing a portfolio from an endowment, endowment for long-term investors. Again, because I do think a lot of our lives today are very short-term. We get dragged into short-term distractions. So it's quite good to think about, what is my time horizon? Because it's the other thing as well. In a technological revolution, things are changing and happening very, very fast. So thinking about those investments, where are you going to be 20 years? What do you need for your financial goals is tricky right now, but important nonetheless.
Okay, that's great. Now, final question. What's the best way to follow you? How do people reach out to you? How do people learn more about, your company and your service?
Oh, well, thank you very much. It's very kind of you to give us the little advert. I am on... you don't call it Twitter anymore. I'm on X at Market Blondes. I'm on Blue Sky. I'm on LinkedIn, and I'm really enjoying interacting with people there now. I'm finding it turning into quite a cool new interaction of genuine good.
I feel like a lot of people have moved from X over to LinkedIn. Like X just doesn't have the same interactions as it used to.
No, exactly. So that's good. But please, I am still old-fashioned. I do read emails, helen@blondemoney.co.uk, and you will find me.
That's great. Okay, well, with that, you've been really insightful, provocative as well, opinionated, and I think really sort of valuable insights that you have, and I think it's quite different to what people are hearing from elsewhere. So thanks again for coming on the show, and good luck with all of your work.
Thank you, Bilal.
Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating, a nice comment, and let other people know about the show. We'd be super grateful. Finally, sign up for our free newsletter at macrohive.com/free. That's macrohive.com/free. We'll be back soon, so tune in then.